The audit report that issues can either be a modified audit report or an unmodified, a modified audit report or an unmodified audit report. The truth of the matter is that management will prefer that you issue the one on the right hand side, unmodified audit report. Now, the unmodified audit report is where the auditor expresses an unqualified opinion. Okay? The auditor expresses an unqualified opinion. What does an unqualified opinion mean? It means the financial statement taken as a whole represents the true and fair view of the entity. In other words, everything is okay. Remember, as always, this is a reasonable assurance, right? Financial statement as a whole, everything is okay. That's called an unmodified report. So the opinion of the auditor is not modified. It's an unmodified. So the auditor expresses an unqualified opinion. But in a modified audit report, here the auditor is saying that something might be wrong with the financial statement. Okay? So something is wrong with the financial statement. Please stay with me carefully here because we are about to dive a little bit deeper into the discussion. When it comes to the modified audit report, there are three types of opinion that the auditor can express depending on three key factors. So factors that determine the type of opinion. Number one, the materiality of the subject matter in question. Number two, the pervasiveness. Now, when we talk about materiality of the subject matter, you know that already because we've spoken about materiality. Pervasiveness of the subject matter is whether the subject matter has significant influence on the financial statement. So pervasiveness has to do with the, if you want, influence or effect of the subject matter on the financial statement. So when we say a subject matter is pervasive, it means it affects the whole financial statement. But if we say the subject matter is not pervasive, it means it doesn't affect the whole financial statement. It only affects a portion of the financial statement, not the whole financial statement. That is the meaning of pervasiveness. So number one, what is the materiality of the subject matter? Number two, what is the pervasiveness of the subject matter? What is the influence? What is the effect of this subject matter on the financial statement? Does it affect the financial statement as a whole or it does not? Then the third thing is the ability of the auditor to obtain sufficient appropriate audit evidence. The ability of the auditor to obtain sufficient appropriate audit evidence. So these are the three key factors. And based on what is happening, the auditor can issue either a qualified opinion or an adverse or diverse opinion or a disclaimer opinion. So these are the four opinions. Unqualified, everything is okay. Qualify or except for, everything is okay except. Adverse opinion, nothing is okay with the financial statement. It's smelling. Disclaimer opinion, this is where the auditor says, I cannot express an opinion on the financial statement. So those three, except for, adverse or diverse, and disclaimer opinion are expressed. One of them will be expressed in a modified audit report. But the one that will be appropriate depends on these three factors. Materiality of the subject matter resulting to us issuing a modified report, the pervasiveness of the subject matter, and whether the auditor was able to gather sufficient, appropriate audit evidence. So let's bring it home. If you go to audit reporting, page 250 of the book, because I want to show you something there, page 250 of the book. So if the subject matter in question, stay with me, because this is an important area. This is an important area. Is material, but not pervasive. It means it doesn't affect the whole financial statement. Then the auditor can issue a qualify or an accept for opinion. It is material. We've gathered evidence that it is not pervasive, and accept for opinion. If we gather evidence that, hey, the thing is material and at the same time pervasive, then we issue what? An adverse opinion. So an accept for opinion is where the auditor writes like, everything is okay, except some misstatements that has been done by the entity, some omissions that may have been done by the entity. Adverse opinion is where the auditor says nothing is okay. Okay? Nothing is okay here. It means that the financial reporting framework the entity is using may not be reliable, may not be acceptable. There may be a lot of misstatements in the financial statements as well. That is the idea about adverse opinion. If the auditor is unable to gather evidence about the subject matter, and the subject matter is material but not pervasive, still the auditor will issue an accept for opinion. However, if the subject matter is material, is pervasive, and the auditor is unable to gather sufficient, appropriate audit evidence, that is where the auditor will say, I'm sorry, management, but I cannot express an opinion on the financial statement. That is what we refer to as a disclaimer opinion. So this is where the auditor said something like this: I cannot express an opinion on the financial statement. Why? Because I wasn't able to gather sufficient appropriate audit evidence. So these are the basis for modification of the audit report. It's a 10 marks question on its own that the examiner can ask you. So he can present you with some scenarios and ask you to suggest the appropriate audit report or opinion that should be expressed. So you must read the scenario and find out, is it material? Is it pervasive? Can I conclude that the auditor has been able to gather evidence or not? Then that will inform you whether you should go for except for adverse or disclaimer opinion. That is the first thing we must understand about the audit report. Then the last thing we need to look out for then is, what are the key elements of an audit report? Please note, the examiner will not ask you to prepare an audit report. However, he may ask you to critically appraise an extract audit report for 10 marks. So although you are not going to be required to prepare an audit report in the exam hall, you must know the pro forma of the report so that when an extract is presented to you and you are appraising it, critically analyzing it, you can know, oh, this is wrong, this is right, this is supposed to be there, this is not supposed to be there. So let's look at the pro forma, if you want, of the audit report. And I'm going to be doing this along with, as I mentioned in session 1, if you remember, Carl Bank's financial statement. So permit me to bring up Carl Bank's audit report for the 2024. You remember we referred to this in session 1, and I told you when we get to audit reporting, we're going to be talking about it. So we're going to be looking at a practical audit report because we want to look at it side by side in that particular case. So the pro forma is going to be starting always with a title. Okay, independent audit report, whatever the heck. Then address. Please note that the audit report is always addressed to the shareholders of the company, not shareholders and management. Because as we spoke about in session 1, who are appointing them auditors? It is shareholders. So the audit report is not for management. It is for the shareholders. So the audit report must be addressed to the shareholders. Only to the shareholders. Number 3, we come to the opinion paragraph. In the opinion paragraph, among other things, the auditor must list explicitly the financial statements audited. So the auditor must mention the financial statements audited. That's the first thing. Second, the auditor must state his opinion. So explicitly state the opinion. So what kind of opinion? Bang. They have to see it at a glance, right? Then the auditor must also mention the various regulatory requirements, such as the fact that, maybe the financial statements are prepared in accordance with some IFRSs, as well as, some acts or legislations. That is what should be in our opinion paragraph. Again, you will not be required to prepare an audit report, but you must know what is supposed to be at which session of the audit report, so that when an extract is presented to you in the exam hall and you are critically analyzing or evaluating or appraising it, you will know, the opinion paragraph is supposed to have had A, B, and C, but they didn't include it, so the opinion paragraph is incomplete. After the opinion paragraph, we move to the third or number 4, based on my write-up, and that is the basis of opinion paragraph. So this is where the auditor explains how the conclusion was reached on the opinion expressed by the auditor. So a couple of things in that particular case. The auditor must mention, or let me put it this way, must make reference to the ISBA, and this will be written in full, the ISBA Code of Ethics for accountants. Okay, the ISBA Code of Ethics. And it should be clearly stated. Let me use another word that means the same thing. It should be clearly stated, not making reference to any other code of ethics or anything. The ISBA Code of Ethics, clearly stated. 2, how the audit was conducted. So how the audit was conducted, which means that we're going to be making reference to ISAs, because we do the audit in accordance with ISA. So reference must be made to the ISAs. That is the International Standards on Auditing. So let's take it piece by piece. The title, the address, the opinion paragraph. Look at the list of things that must be there. The basis of opinion paragraph. Clearly, 2 major things we want to see there. How you did the audit in accordance with ISA. We want to see that there. And we want to also see clearly the fact that we undertook the audit independent of the client, making reference to the ISBA Code of Conduct. So we are not done, but let's go to the Carl Bank's audit report for 2024. The auditors, Deloitte. So let's see the audit report for Carl Bank for the year 2024. So what do you see first? Independent audit report to whom? The shareholders of Carl Bank PLC. Note, they didn't address anybody else but the shareholders. So that is our title and address checked. Opinion paragraph. Remember the things we said that will be there. 1, the financial statement. 2, the opinion. 3, regulatory requirements like IFRS Act and everything. So let's come to the opinion paragraph of the Deloitte report. We'll read it, okay? We have audited the consolidated and separate financial statements of Carl Bank PLC and its subsidiaries, the bank and the group. Set out on page whatever the heck, which comprise, so now they are listing the financial statements. Then he says, so this is all listing the financial statements they audited. Come to the second paragraph. In our opinion, again, go to the pro forma. List the financial statement you have audited. Explicitly state the opinion. In our opinion, the consolidated and separate financial statements give a true and fair view. It means BBI. So this is an unqualified opinion. Are you following it? An unqualified opinion represent the true and fair view, or give a true and fair view of the consolidated Then for the year ended in accordance with IFRS accounting standards issued by the International Accounting Standard Board, with the IAS 19 directive issued by the Institute of Chartered Accountants Ghana, the requirement of Companies Act the bank and specialized deposit That is our opinion paragraph. So you see, the financial statements were listed. They stated their opinion that the financial statement give a true and fair view. Everything is okay. Then they listed or they mentioned the regulatory requirements. IFRS is, because it's a financial institution, that is why it is talking about the bank and special deposit taking institutions Act 2016, Act 930. If it's an insurance company, then they will refer to the Insurance Act. That's the opinion paragraph. What are we doing? You won't write it in the exam, just know the pro forma, so that when an extract is presented to you and you read the opinion paragraph and they have not listed the financial statement, they just talk about certain things and they didn't talk about any act, any standards, then you know that the opinion paragraph is incomplete or inappropriate. So in your appraisal, you would then have to make reference to what should have been there. You are not redrafting the audit report because you won't write audit report. You are just going to now write your answer to state what is supposed to be there that they did not bring. So that's our opinion paragraph. Next, the basis of opinion paragraph. As we said, how did you do the audit? Making reference to ISBA. Let's see the basis of opinion paragraph for Carl Bank issued by Deloitte. We conducted our audit. So how did you do your audit? All right. So we conducted our audit in accordance with international standards on auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibility, So, reference to the ISAs has been made. Continue to read. Please stay with me. We are independent of the group in accordance with the professional accountants, including international independent standards, ISBA code, and other independent requirements applicable in accordance with the ISBA code or whatever. So that is the basis of opinion paragraph. Is that difficult? It's not difficult, is it? Now, in the audit report of Carl Bank, you see something there. Material uncertainty relating to going concern. As I told you earlier when we were looking at this is an unusual paragraph because this paragraph will only be included in the audit report if the auditor's assessment of the ability of the entity to continue in the next 12 months is in doubt. So there are not many audit reports that you will see that paragraph, because really from the basis of opinion paragraph we are supposed to go to the CAM paragraph, key audit matters. Are you getting it? The key audit matter paragraph. Hey. Paragraph. Now the key audit matter paragraph is where the auditor brings to the attention of the shareholders significant issues that arose during the audit and how they were dealt with. Okay, so the auditor draws the attention of shareholders to the significant issues that arose during the audit and how they were resolved. That's the key audit matter paragraph. But as I said, sometimes between the basis of opinion paragraph and the key audit matter paragraph, we may have that paragraph you are seeing in the Carl Bank's report here, material uncertainty relating to going concern. Sometimes it can come after the key audit matters. Other times it can be in between the basis of opinion and the key audit matters. Okay? So material uncertainty relating to going concern. So when you pick MTN's financial statement, you won't say this. When you pick Ghana GCB PLC financial statement, you won't see this paragraph. Because this paragraph only comes up when in the auditor's assessment, the company's ability to continue in business in the next 12 months is in doubt. We are not sure. And we want to let shareholders understand so that 6 months after we have said, oh, the financial statement give true and fair view. If Carl Bank becomes, bankrupt and is liquidated, nobody will come and sue us and say, you didn't do your job well. No. Because the inclusion of this paragraph does not modify our report or our opinion. The fact that we are raising a red alert on the entity's ability not to be able to continue in a business in the next 12 months, based on our assessment, we doubt it, does not mean the opinion on the financial statement for the year is wrong. I hope you are getting the treatment here. So this does not modify the opinion. So the opinion still stands. That, if we take the 2024 financial statement of Carl Bank PLC, BBI are fine. It gives a true and fair view. But for the next 12 months there, we are not sure. And that is the material uncertainty relating to going concern. Now, so what concern did Deloitte raise in respect of Carl Bank PLC? Let's look at what is here. We draw the attention to note 42 to the financial statement, which indicates that the bank and the group reported a net profit of this. Give me a moment. Let me pick yellow. Reported a net profit of this from the last year, which they made a loss, of that. The bank and the group also had positive net assets of this. Okay? But last year, 2023, they had a negative net asset. So if you look at what the heck is happening here, it happens that 2023 to 2024, it's good. So let's go down. The bank has an impaired capital of negative this as compared to what they had last year. It was still negative. The capital adequacy ratio, which is a key indicator for banks, as at 31st December 2024, was negative 7.22. And that is a downward, like a reduction from the 2023, which was negative 9.9. The capital adequacy ratio, as against the minimum level of 10%, as indicated in note 7.5 in the financial statement. Because as per the Bank of Ghana's regulations, the capital adequacy ratio should be minimum of 10%. You are in negative 7. That's why the auditors are doubting the ability of Cal Bank PLC to be in business in the next 12 months. So look at the final paragraph there. As stated in note 42, these events or conditions, along with other matters as set forth in 42, and if you get the whole financial statement, go to note 42, there are a lot of other serious things there, indicate that a material uncertainty exists that may cast significant doubt on the bank and the group's ability to continue as a going concern. This is the beautiful part. Our opinion is not modified in respect of this matter. That's what I was telling you earlier. That the inclusion of this paragraph does not mean that the opinion they had reached in the opinion paragraph is wrong. We are just telling you about something that is likely to happen in the future. So that is the material uncertainty relating to going concern and what is included there. So if you look at this and you ask yourself a lot of questions, if the minimum is 10%, why is Bank of Ghana still watching them at negative 7.22? If auditors are raising this concern, what is the regulator doing about it? So these are the questions that shareholders are now going to be asking themselves. Should we continue to hold on the shares of this company, or there is no hope for the future? That is the material uncertainty about going concern. Okay? Right. So right after that, we come to the key audit matters, which is going to be showing us significant issues that arose during the audit. So come back here. Let's come back. You can see key audit matters. So immediately after the material uncertainty relating to going concern, you see key audit matters. The beauty is that it is defined, so shareholders will know what that paragraph is about. So it says that the key audit matter is the matter that, in our professional judgment, which is of most significance in our audit of these matters was addressed in the context of our audit. In addition to the matters described in the material uncertainty related to going concern, we have determined the matters described below to be key audit matters to be communicated in our audit report. So that is the paragraph. Anything at all that the auditors encountered during their audit and how it was dealt with, they included today. So it depends on the company in question. Here, I think they raise only one key issue, expected credit losses on loans and advances. That was the key issue, because that's really the significant issue for many financial institutions. Expected credit losses on loans and advances. So it says that as at this, loans and advances portfolio was 3.5 billion Ghana cedi, which with an associated impairment loss for expected credit loss of 1.4 billion. Like, you have loans and advances 3.5. Expected credit losses is 1.4 billion. That's some huge thing there. As described in note 4.da, they mention everything in that particular case. Then how the issue was resolved. So they will explain to you. We performed the following procedure with the assistance of our credit specialist. Because remember, the team we use for auditing a bank will be different from the team we use to audit a telecommunication firm. So the credit specialist, who is part of the team of auditors, will help in this so we can reach the conclusion. So we obtain understanding of management processes around the measurement of this, including management model and methodology. We evaluate and design, So all the procedures they undertake. Based on our procedure described above, we found management estimates to be reasonable. So management had estimated that 1.4 billion, which is allowance for impairment, it's not going to come. That's serious, bro. How do you give loans 3.5 billion and 1.4 is not going to come? Like, how did you even assess the people before giving them the loan? Please, I'm not judging, right? We are just learning. But these are the questions auditors are going to be asking. These are the questions auditors. It means we are in the realm of non-performing loans. That's what we are in the realms of. So that is the key audit matter paragraph. Then from there, so you see this slide, number 6, we are going to go to the responsibility of auditors, responsibility of managers, responsibilities of auditors, responsibilities of management. Then we'll have other information. Sometimes the other information will come before these two. It depends on the presentation. So remember, in the engagement letter, when we accepted the audit, responsibility of auditors was listed. Responsibility of management was listed. In the audit report also, we want to do that. Because we want the shareholders to know what our roles are. We want the shareholders to know what management did, what their responsibilities are. So it's just a reminder to the shareholders what our roles are and what management also does. So let's come to Deloitte. So you could see the other information paragraph there in that case. So if you remember, I told you that in audit reporting, you're going to be looking at other information. Now, these things, we are not reviewing them to issue audit report or express an opinion on them. No. We are just reviewing them because they will help us to confirm, find consistency in the financial statements as a whole and make certain judgments. So we are not going to be expressing opinion on these other documents we're going to be reviewing. A couple of them are listed here. Directors are responsible for other information. The other information comprises 5-year consolidated summary, corporate information, board of directors profile, profile of executive management, report of directors, the chairman's report, the managing director's report, corporate governance report, risk management declaration, sustainability report, 20 largest shareholder value added statement, and all of those things. So these are other information. And we are not reviewing this to express opinion on them. That's the idea about that. So you see here, we have nothing to report in this regard because we are not here to express an opinion on them. That's all. So that's the other information paragraph. But from there, you come to the responsibility of the directors, responsibility of the auditors, and you know this already. Directors are responsible for preparing the financial statements, adopting the internal controls, using the acceptable financial reporting framework. Auditors, what are we there to do? We remind the shareholders what our responsibilities are. Once we are done with all that, there are some reports on other regulatory requirements, if there is any, because this is a specialized entity, so we're going to be having that there. After that, it is signed, addressed, dated, and that's the pro forma of the audit report. We're done. Okay? Signed, and then address of the auditor. So this is the pro forma of the audit report. Slide 1 there for you. So you will not be required to redraft or write it. You must know what comes where and what is recorded where. So when a draft is given to you or an extract is presented to you, you know exactly whether they have recorded everything. Because sometimes, an issue that then the second slide, if you want to. Because sometimes, an issue that relates to maybe key audit matters, issue that arose during the audit and how they were dealt with, may be accidentally recorded under the basis of opinion paragraph, or may be put under uncertainty about going concern. So you, the auditor, you, the expert, you, the professional, must know that and then you can do the right thing. And that is what we mean by the audit report. And we use the Carl Bank's audit report for the 2024 year ended, prepared by Deloitte to show you what we are doing.